especially Baltic bonds, they're not like very liquid.
We sometimes joke that if we compare our secondary market and Nasdaq market in the Baltics, we have more active secondary market than the Nasdaq market.
What is the structure like? What I'm buying?
Possible that there's going to be apartment and there's going to be 10,000 investors as owners registered in the land register. So that also obviously doesn't work. So in general, people are not aware that they can invest in bonds, which is a good fixed income product. It gives you regular income, coupon payments, which usually are on quarterly basis, and then you get your principal back after a couple of years or 3 years or maybe 5 years, depends on the term of the bond. So that's completely different from the loans.
You did not that regular lending platform where person comes and lends money to other person, but you did like a loan marketplace. How did that happen? Hello everyone. Probably it's interesting for you why I'm speaking in English. And first of all, I would like to say a little bit sorry for our previous viewers who probably thought that it's going to be one more Lithuanian podcast or in Lithuanian. So sorry for that. No, it's going to be in English. And also, I'm sorry for those who are listening in English, because English is not my native language. So don't be very judgy. But today is very, I would say, happy day for us because as I would joke, we go international and we have a first guest not from Lithuania, from abroad. Not from far abroad, from Latvia. And today we have Martins Sulte. I hope I pronounced right, from Mintos. Now Mintos is, as I read, a multi-asset investment platform. Before it started as P2P or investments in loan platform, and it grew to multi-asset investment platform. So, hello to Lithuania, Martins, and happy to have you here.
Thanks, Artūras. It's always Artūras, or in Latvian we would say Artūrs, but it's always a pleasure, and it's a pleasure to be kind of the first and to be first in English. So let's try to make the best of it.
Yeah. So as we begin, usually what we do, we ask our guests to give a short introduction. So if you can just provide your path from, I don't know, where you started, interested in, let's say, finances, and how you get to one of the co-founders of Mintos, and then we're gonna talk about what Mintos does and where it's going.
Sure. Then we have to go very far back in my childhood, I guess. So I was exposed to finance in a very, basically, obviously, post-Soviet Union type of setup to finance when my parents were basically, we used to have a grocery shop. So, and then one of my first things, what I remember, and that was in the countryside. So they gave me some, I don't know, at that time we had our local currency lots, and they gave me 5 lats. I could buy something in the capital city and sell it in the grocery shop back in the countryside. So that's when I was maybe, I don't know, 6-year-old or 7 years old. But starting from there, I think I've always been pretty good in math. I liked it. It also did rather well in that. Then subsequently, I went to the undergrad, which I also did in finance mostly. So I was studying at Stockholm School of Economics in Riga. So that's very much kind of finance focused. And then after I went into the actually EY. I was in audit and
Ernst & Young.
Ernst & Young at that time. So now it's EY. Spent only a year there. I realized that I'm not going to be auditor. And then I did actually the investment banking. I was part of SEB and Skilda at that time. And we did the basically mergers and acquisitions. And Mintos was born after I did my MBA. I did MBA in abroad, and then decided to come back, and then we started Mintos, which feels like a long time ago, but actually feels like yesterday. So we started back in 2014 or 15 when we launched. 14 we started the idea, and 15 we launched the Mintos. So that's very short version of my interest in finance from the very early childhood.
So I have here one question. Like you mentioned that after you worked in the bank, and then you decided to go abroad and to study, just for studies, or you also worked abroad?
So my initial idea, so look, I was working at SEB and Skilda, which is investment bank. So what we did, we helped the shareholders to basically measure acquisitions, usually about actually on the sales side.
Yeah.
So they came to us as shareholders of the companies, and we helped them to run the process and to sell the company. So I had some international exposure, but not much. And then I decided that actually I do want to do the MBA, specifically. MBA, not like master's, but MBA. And then I was looking for top school in the what are the top schools in the world. And I was lucky that I got into the INSEAD, which is one of the top schools. And I specifically didn't want to do US. I wanted to do the everything which is outside of US. And INSEAD was one of those. And my initial idea was to go to the INSEAD and actually spend time abroad, pay back all my student loans. I had a lot of them. A lot, and then come back and do something myself, entrepreneurial. So that was deep down what I had. But then after school, which I finished in 2013, I decided, I'm actually gonna take all the risk now. And then basically in 14 we started to work on Mintos. But the initial idea was to go study and stay abroad and work, which I didn't do in the way I imagined, but ended up very well because we started Mintos, and Mintos is, as you say, all-in-one investment platform, multi-asset platform, and our business is super international.
Okay, so we talk about this in a moment, but I'm just maybe personally curious, like what was like that moment when you, I know that you created Mintos with a partner, also Martins, two Martins. And was he your friend from like childhood, from university? Like what was that moment when you decided, okay, I'm coming back to Latvia and do this?
It was a bit tough because all the things in life, I guess, it's not like clear paths or basically clear-cut points where it's like, okay, this finishes and this starts. It was a bit of the process. So I finished the MBA. My idea was to get a job and stay abroad. I didn't get a job, and that actually gave me a month of like pause after the studies to decide what I actually want to do. And naively, my initial idea was actually to come back and combine my experience with investment banking with my interest in finance and basically increasing interest in tech, and to combine it and create naively risk capital fund in 2014. And venture capital, like in 2014, is like there's no startups, nothing. So it's basically the days when most of the big companies which you have today, and you have many here in Lithuania, they were not even born. Maybe Vinted was there, but it was like just super tiny at that moment. Right. So that was my initial idea, to build a venture capital fund that exposed me to all the startup scene. And then from there, actually, I got the idea. I had multiple ideas. And one of the ideas which I got was by reading some of the media, and specifically TechCrunch at that time. So they basically tech media outlet. I was reading about the P2P, peer-to-peer lending in the US and UK. And that's basically where the idea of Mintos came. And Martins, so my other co-founder, he joined actually about half a year later when we started. And I know him from undergrad, from the Stockholm School, from SSA Riga, and then from the EY days. So we used to work together at EY, and then I basically was looking for a co-founder and just asked him if he would want to join us.
Okay. What I hear that a lot of, let's say, good ideas or bright minds come from SSR Riga. That's cool. I have Lithuanian friends that studied there. And
yeah, sure, 100%. I mean, look, back in the day, and I would say still today, SSA Riga is one of the top schools. Like, I think for us at that time, that was perhaps one of the only schools you would go, especially if you're from Latvia. So that's basically, if you want to do finance and kind of top school, you go there. today I see more people, they have much more opportunities. So people can go study abroad much more freely than we could, but it's still a good school, and definitely we have a good network, specifically definitely in Latvia, but also here in Lithuania. Like I have a good network from SSC Riga as well.
So, and you mentioned that, let's say, about 10 years ago, that idea came and you started Mintos. As I remember, in Latvia and probably in Lithuania, we didn't have any regulation of P2P platforms as it is called now. And what you did not that regular P2P or peer-to-peer lending platform where person comes and lends money to other person, but you did what like a loan marketplace or loan originators marketplace. How did that happen? Like, why? Because not regulated, and you are inventing even something else.
Yeah, that definitely was a big topic of the early days, and for quite some time to get it in the legal and regulatory setup so that it can work. Initially, actually, when we were thinking, and myself, I was thinking about the idea. Like many people whom I talked to said, like it's not possible because there's no kind of regulated environment. But we said, well, but maybe there is a way, and we found a way how you can actually put it into the legal setup and the regulations which were at that time there, how you can actually create that people can invest in loans. And we called it basically marketplace for investing in loans. Initially, so we allowed to invest in basically the loans we created ourselves. So we as Mintos, we were lending money, which sounds maybe strange today, where we are like as an investment platform. But initially that was a business model. We were lending, and then we were offering those loans for investors to invest in. From there, then we basically expanded we realized, okay, that is, we can basically lend only that much, but then there are all the other lending companies which also need capital. And we actually pivoted from the early model to which became our model for quite some time, where you could invest in loans of any lending company which was connected to Mintos. So I would say all this comes from just starting something and then you take one step, you take the next step, and then you see, okay, well, there is more opportunities, and we definitely saw the opportunity in a broader space where we can work with the lending companies. They do all the lending and they issue the loans, but then we take those loans and offer to our retail customer base.
Because as I remember, like usually those lending companies, we also worked with borrowed capital, maybe sometimes 10 to 1, or it depends, but they could offer quite good interest rates. Let's say if it's consumer lending, so usually they lend for their customers for even more. But yeah, and we didn't in Baltics, we didn't have very big bond market for those companies to go and borrow. From banks, they usually do not get, or get a small amount, and if they want to increase leverage. So, but as I understood, it was not like the first idea to do that marketplace.
No. I mean, initially it was
like step by
typical. You guys in Lithuania had the same Savvy or Savvy. So Savvy. So that was the initial model. Also, like similar. With a bit like different legal setup, but the initial model was actually the same. So we were lending ourselves. Actually, the borrowers came to us. We gave the loan, and at the same moment, we put that loan on the platform, and investors basically invested in the loan. So that was typical P2P lending, what we did initially. But very soon after, we pivoted to working with the lending companies. And then after COVID, when we went into the regulatory process afterwards, and we pivoted or expanded to what we are now, when we offer multiple assets on one platform. Like today on Mintos, if you come on Mintos, you can invest in loans, where we come from. We are very excited about the bonds. So we can fractionalize the bonds, so you can invest in any bond starting from 50 euros. So we make it accessible to any investor, retail investor. You can invest in ETFs, you can invest in money market funds, We are also super excited about the rental real estate. So you can invest in Airbnb apartments from a fraction of 50 euros without all the hassle of managing the apartment, and you still get rental yield plus capital appreciation. And we're gonna launch crypto anytime soon, and we're also gonna launch stocks as well this year. So that's then makes us basically covers all the assets which retail investors would want to invest in. So we have come a long way from being a P2P lending platform to fully regulated European investment platform, which covers all the assets.
When was the year when you get that in European MiFID II license? Do you remember?
Yeah, so it was again a process. So it wasn't that it's like one day. So we started the process in 2021. We thought it's gonna take 9 months. Guess what? How long it took? It took actually 3 years to finish. So we finished the process. I would say we finished end of 2023. And by finished, I mean that we transformed all the operations, and we had to transform a lot. So with all the regulation we got, simple things like we need minimum regulatory capital. That's obviously then we have to we have to basically do all the processes and procedures according to the regulation. We have to do all the management has to go through the check by the regulator if we can actually manage a regulated market player and plenty of other things. So that's first thing. Then we had to do the passporting. Our license allows us to work across the Europe. And then only then we finished the process. So we finished the process end of 2023.
3 years. We work with licensing and things like that. So 3 years, it's like a lot. Yeah, but 9 months would be. I believe you come as basically the one player in Latvia, because you did in Latvia, and then passporting you did in other countries, but in Latvia you're biggest. So I believe the regulator talks to you, but only one, and still doing something new. And it's like in my experience, regulators usually they are not very, let's say, open-minded and wanting to create something new.
I would to some extent disagree. I mean, I could agree that they maybe, obviously, regulator's job is to protect the market, so their job is not to create new things, right? But overall, we had a very good working relationship with our regulator, and I think it took us a bit of time to get there because we were sizable, even on a European scale. If you look now, today we have about 750 million assets under 750 million euros assets under management, and we have around like 600,000 customers all across Europe. And that's already not a small number, even on European scale. So the regulator also got quite a bit of questions also from other regulators when we were doing passporting. So they had to make sure that we have all the AML procedures in place. So that's a big topic, actually. We have the KYC in place and everything, which is basically, as an investment firm under MiFID, this regulation is like comes super close to bank license. So I would it's kind of up there.
Yeah. So what I saw, I checked numbers a little bit. 600,000 investors. It sounds very nice. I believe Latvia, Lithuania, and Estonia. You said. Can I see that number from Lithuania? You said about 10.
The Baltics, we have around 50,000 in total.
50.
So
just 10%.
Still, Estonia is quite a bit. So I would say from Estonia about like say 25 approximately. Then from Latvia about 15, and then from Lithuania 10,000.
And majority Germans?
Germany is a big market, so obviously it's like a big economy, and there is more capital available in general. Spain is also a big market for us, and then the same actually France and Italy as a big markets.
Biggest countries, let's say.
Yeah, in Western Europe obviously is the largest where we are. But look, I would still argue that today we are still just like small player in the grand scheme of things. There is still many more investors out there. So if you look across Europe, some of the numbers I've seen, that there is about 100 million investors in Europe in total, and they continue growing. So us is like basically maybe 1% of people, and then I would most likely also in the same Lithuania, like most likely not everyone knows about Mintos, or if they know us from the past when we were offering just loans. But now we have much more than that, and that's also something which we are now working on a bit more.
Yeah, so I can talk only from, let's say, my perspective. Yeah, my introduction to Mintos was investing in loans, and I saw that all the process and information that we're going to launch at ETFs when you launched it, but I believe that not a lot of clients know. I believe those investors who invest know, but if you do not do advertisement in Lithuania, so yeah, but Lithuania is Lithuania. It's like as you said, all Baltic states is like 10% of your clients. And you mentioned that Europeans, only Europeans investors.
Yeah. Our license is basically MiFID II investment firm, and that's European-wide license. So we have passported all across Europe, and we can service European investors. And look, Europe is huge. If you look, there's still a good growth. Still, a lot of people are unfortunately not investing. If you compare Europe to the US, so some of the numbers I've seen is in US, about 60% of people invest one way or the other. In Europe, it's like 20-30%. So it's still like huge gap. And in some countries, the gap is even higher. So I would most likely in the same Baltics, we are talking about much less than 30% of adult population actually investing.
Yeah. I'm not sure about Latvia, but in Lithuania, we are joking, like we have second pension pillar where pension funds, where it was before that everyone just gets invested, and then he has to decide to not invest. So basically, from working population 1.4 million, we had 1.2 investing in those pension funds. But it was the biggest number of investors where you can see. But if we look at let's say traditional funds, ETF stocks or other instruments, so it was, I would say, less than 10%. And you were correct talking about Europe. There was, I'm not sure if it was ECB or some other institution European, but we did a study about where by each country, how many, what are percentages that invest into where it invests, and majority was, let's say, just cash or money in the bank, basically. Then insurance products, and only then goes other instruments. So yeah, we have a lot room in Baltics and even in Europe to grow. And as I see, there is some politic will to increase that number. Okay,
and it is increasing. To be honest, we definitely also see the change, and it is increasing. We see more and more. I'm super happy to see young people when I was 20. Like investing was last thing what I was thinking about. Right now, actually, I meet every now and then people who actually start from the young age investing, even with small amounts, and build the habit of investing. So definitely, it is changing. It's both policy-wise, but it's also that there's just more opportunities. Look, even here in the Baltics, there are platforms like the same Mintos, but many other platforms, and the banks are catching up. All the new banks obviously offer investing as well. So there is more opportunities, and it's definitely changing. And for sure, as Mintos, we also want to play a role in this and offer something which is perhaps unique. So you don't get everything in one platform as we do on any other platform, and just help people to reach at the end of the day their financial goals, and help them with reaching the goals they have.
That sounds very, when you say that you can reach lots of instruments in one place. So if we can, I would like to go through like those loans, bonds, then real estate, very interesting that what you said, how it's done, and then other instruments. So as I know, you started from loans, and why I asked about investor base, because I remember that you had loan originators even from Africa or somewhere else. So you had a lot of different loan originators. I believe you had some also and defaulted maybe, but how it changed from loans to bonds. Could you explain? I understand, let's say, loan part. You have a loan originator that works with some, I don't know, let's say consumer credit or car leasing, and then they need the money. So basically, as you said, you lend the money to them, and then you sell the loan to investors, which is somehow linked to that loan. If I'm correct, if you can explain a little bit. And talking about bonds, is it also like the same structure, just it's called the bond, or it's totally different? It's complex with like 100 different originators, or
Yeah, well, it's basically short answer is totally different, and let's start with the loans. So the loans is correctly as you say. So we work with the lending companies. We today have about 50 different lending companies from 20 different countries, from I don't know the same Mexico to Kenya to Indonesia, and then everything in between. So there is a wide diversification possible for any investor who wants to invest in loans. So that's still a great product which we believe in, which we continue working on. And even throughout the crisis, which was the perfect storm crisis, was COVID, and then also Russia war, which affected. If you look down the 10-year period, it gives you a good risk-adjusted return on the loans.
approximately?
I would say what we reckon, still there are some recoveries ongoing, so it depends on those recoveries, but we reckon it's going to be about like 8 to 10% after all the defaults. Obviously, if you have invested in a diversified portfolio and throughout the years, right? So that's still a great product. Today, it's a bit different from the structural perspective because we are regulated. So technically what investors are buying, they are buying what we call loan-backed note. So what we are doing, if you want to go a bit more in details, so as a SPV, we are buying the loans from the lending company, and then we package those loans as a note, which then we sell to investors. And this note, loan-backed note, is performing in line how those underlying loans are performing. If they are repaid, then you get payment to your note. If they are late, it's late. If they default, then there is a potential to be default.
Note is a financial instrument.
It's a regulated financial instrument. It has ISIN number. It has a prospectus. So it's in a fully regulated setup, the same type of financial instrument what you can buy in any other place. So it's a financial instrument at its core. So that's basically the loans, and we continue working on that, and that still is a great asset. When it comes to the bonds, that's totally different. So the bonds, what we do, we fractionalize any type of the bond. So on Mintos today, we are working on expanding the offering, but you can invest in bond from, say, Air Baltic. So you can buy Air Baltic bond. You can buy BMW bond if you wanna. We offer you Romanian government bond if you wanna. You can invest in Easy Debt Service, which is Lithuanian company. You can invest in their bond or any other bond. So basically what we do, instead of that you need a minimum, say, usually in the bonds, 100K, maybe 10K, sometimes 1,000 euros is a minimum. We fractionalize, and you can invest from 50 euros. And obviously the beauty of the bonds is that you can build a very diversified portfolio across different industries. And with a small portfolio, already say 500 euros or 1,000 euros, you can pick, 10, 20 different bonds, somebody from manufacturing, advertising, also lending, finance. So we offer that. Or then pick your Romanian government bond. So we open up access to the bonds, which previously was in many cases actually people are not aware that they can invest in bonds, which is a good fixed income product. It gives you regular income, coupon payments, which usually are on quarterly basis, and then you get your principal back after a couple of years or 3 years or maybe 5 years, depends on the term of the bond. So that's completely different from the loans.
Okay, yeah, because I didn't know about this bond. I read, but I thought that those bonds are like packaged loans, but as I understand, it's two different. You have, let's say, packaged loans into notes, and then you have fractional bonds. And are those bonds mostly corporate or also government?
Mostly corporate. We also now just introduced what we call a wish list. So in the wish list, we put many type of bonds, and for instance, we also put what is interesting government bonds. If we see there is interest in certain government bonds, we also go out in the market, we buy those government bonds, and then we fractionalize, and investors can invest in this government bond as well. So it depends. Actually, people today can express their interest, what type of bonds they are interested in. Our aim is to get to like a good list of I know tens of bonds, if not hundreds of bonds, which are both corporate and also could be government. Obviously, they tend to be more kind of high-yielding bonds. That's where most of the retail interest is in. And as long as you build a diversified portfolio, I believe the risk-adjusted return on those bonds is actually very good.
How do you, maybe you do not manage, but is there liquidity for those bonds, fractional bonds?
Yeah.
If I buy as an investor, like, can I sell? Is there like a market in Mintos secondary? Because in my experience, especially Baltic bonds, they're not like very liquid.
We sometimes joke that we do have a secondary market, so there is liquidity. And sometimes it's obviously not like a correct comparison necessarily, but if we compare our secondary market and Nasdaq market in the Baltics, we have more active secondary market than the Nasdaq market. So there is a good liquidity. We have obviously a lot of investors. We are not playing a market maker, so we are not involved as Mintos, but there's because we have a sizable investor base, and we provide automated tools which allow to invest automatically in the secondary market. So there is a very good liquidity on the secondary market.
But and for example, if I buy not a fractional bond, but let's say 1 unit of a bond, let's say, I don't know, 1,000 euros, can I like sell it on the market or to anyone else that is not on the Mintos? Like, or transfer, as you know, for example, I buy, I don't know, Latvian government bond in Swedbank, I can transfer it to SEB.
Because we fractionalize, then you can operate on Mintos, basically ecosystem. So it's not possible to basically sell your fraction to somebody else because we fractionalize
it's
ourselves.
Not the fraction if I have like total amount. Like
it's still going to be fractionalized. So we still, even if you would buy the whole, it's still through the legal setup, it's basically fraction which you are buying.
And how do you see, let's say, investors' behavior comparing loans and the bonds? Like, is it still, because I believe that loans provides a little bit higher yield, or should, or maybe no?
It depends. Obviously, as everything in finance, the higher the risk, or the higher return, the higher the risks. Also, on the bond market, the same. So you can get government bonds. I know German government bond gonna pay you 2%, maybe 3%, depends on the interest environment. And then high yield corporate bond can pay you also 14% or 15%. So it depends, right? In euro terms. So it's different. So I wouldn't necessarily compare. And the beauty is that you can basically build a diversified portfolio on one platform. So you can get exposure to loans. And then you can get exposure through bonds to other sectors, right? And with the bonds, I think what we see, it's a new product for us as well. So it's been like 9 months since we launched, but it's also a new product for investors. So the surprise a bit for me is that people actually understand loans better than the bonds. I would assume otherwise, because the bond is actually a super simple product. So as a company, they issue basically a bond, which you're lending money to the company or lending money to government, right? But there's still educational work to be done, which we do. And the best education is just that people start investing, and today they can start investing from just 50 euros on Mintos and see how it actually works. And it's like, I see a good growth in terms of assets under management in the bonds. And in general, I very much believe in that market, because I think the bond market on European level is super opaque. It's very hard to get access to any of the bonds. And if you want to build a good portfolio of high-yielding bonds, corporate bonds, government bonds, there is very limited options available. So definitely, I see a lot of potential in the bonds what we offer.
Yeah, I remember one picture. It was US, the financing structure, and European, and it was bank loans, I believe private loans, and bond market. And in US, it was like third of each, basically. In Europe, it was about 80% of banks, and then the rest. So it's not like only, let's say, Baltics, but basically all the Europe situation. I wouldn't say problem, because I believe business, they go to the bank, okay, for how much I can lend here, and if it's too much or whatever, I compare with other instruments, and if for a bond I have to pay, let's say, 2% more, so maybe I go to the bank. So I heard this a lot, and but now it's a little bit changing, because business sees that to go to the bond market, you don't have to do those monthly payments. It doesn't amortize. Usually you do, let's say, a 3-year bond with coupon every year, and then at the maturity you pay back or a finance. So it's changing, and for good. Okay, so but you would say that still majority interest in, let's say, bond market is in that more higher yielding, or do you have a lot of people investing in Germany? Or
I would say as a retail investor, obviously they're gonna seek yield more so. I think there is I mean, it's not necessarily that they go for the highest yield, but it's a good balance between the return and risk what they take. So it's gonna be more corporate bonds where you are getting, I don't know, 8%, 10% yield to maturity. So that's what we see retail investors more so interested. Obviously, as a retail investor, to invest in I know German government bond, 10+ year term, 2%, it's like, yeah, well, that's more for pension funds and institutional than for the retail investors.
Plus, if you're looking into shorter term, then you also said you have money market funds, or like that pays something probably the same.
No, money market funds obviously is money markets pays exactly. They pay the same as German government bond, but the liquidity is instant. So what we offer, what we call smart cash, that is in collaboration with BlackRock. So or basically we are selling BlackRock money market fund, and liquidity is instant. So if you need money today, you get it today. You can place as much as you want, and there's no fees, nothing. So it's a very there's small fee which we charge from Mintos perspective, and super small from the BlackRock perspective, but it's super good product for the short-term cash management, which we launched last year.
Okay, yeah. I heard about BlackRock liquidity fund, yes. So, okay, understood. And then you mentioned at this moment you have real estate and the ETFs at this moment. And I'm very interested, because today I checked and I saw real estate, but I didn't go much deeper, because my first thought it was probably loans with backed real estate, but it's not that way, as I understood from your comments. So could you tell a little bit more? Because from my experience, I don't remember, like maybe I remember one company from Spain, I believe, they were doing that, invest in real estate and earn rental income and maybe appreciation. But in Lithuania, maybe we have one. I think we have one that do that, but that's it. Like and the majority, for example, in Lithuania, biggest not P2P, but those let's say P2P platforms, crowd lending platforms, they are focused on real estate just as a sector. They grow very fast. They grew very fast, and usually it's you lend the money to developer for, let's say, 10 plus 10%. You get that real estate as a collateral, and it's very simple, and everyone in Lithuania at least understands that. So what's your situation?
It's very different. So we are not working with development projects, and that's a whole separate sector which we're not working with. So when it comes to real estate on Mintos, so what we offer is to invest in rental real estate units, properties. So it can be single family homes, which you can now invest in Austria. So we have a partner which is providing single family homes in Austria, or then then you can invest in Airbnb apartments, which we now offer in Riga. Or then you have, there's going to be also Denmark, Poland, Spain. So we are working on other countries as well. How it works, you are basically buying as a fraction of the apartment of rental property, and then you are getting your net rental payments every month. So whatever in Airbnb, and you can actually omit this on Airbnb apartments. You can click through, you can see, okay, this exact apartment is on Airbnb. You can check like how it looks, all the nice pictures, like bookings and everything. You can book
Even bookings.
Yeah, you can book if you wanna at the Airbnb apartment, and then starting from €50, we allow you to buy a fraction of that apartment. You buy a fraction, then every month you get a fraction of net rental payments, and then capital appreciation obviously is also there if and when the apartment is sold. But of course, there's also secondary market, so you can sell your fraction to other investors if you want, and in that way realize your capital appreciation. I think it's a great product. So if you look how we built this product, is that as a retail investor, many retail investors, when they think, and especially in the countries and like new economies, but not only, but like in the Baltics, many people, when they think about investing, one of the first things come in mind. For those lucky enough to have enough capital and also time, they want to buy a rental apartment, right? So they buy a rental apartment, they rent it out, and they get their basically rent plus capital appreciation. And then we thought, hey, but we can actually, with all the setup and legal and regulatory so forth, we can fractionalize all of this, and we can do all the heavy lifting. So we're gonna do. Technically, it's partners which are doing. So it's not Mintos who's buying. So we partner with the real estate companies, which is basically sourcing, renting the apartments and managing them. And then we place those apartments on Mintos, and I love to buy a fraction of that. So as an investor, I get still my net rental income. So in terms of yields, for instance, in Riga Airbnb, you get about 6-7% net without doing anything. So 6-7% net percent per year net. You don't have to deal with any of like renting and bookings and anything. And then capital appreciation, which usually is like 2-3%, depends on the inflation. So all in all, you're getting 8-9% on real estate. So I think it's, and we also do see a lot of interest from retail investors. So to the extent that actually today more of the bottleneck is on the supply side to get more of those properties than on the demand side.
So you said Austria, Riga, some
Denmark, Poland, Spain are the next countries.
Are you planning to go to Lithuania?
No, we have not like. It also depends. Look, it's not Mintos doing the sourcing and everything. So it depends on the partners, and with the partners we have, then we could also consider Lithuania.
You could try looking for partners in Lithuania.
Yeah.
But maybe I hear from even Lithuanian investors in real estate that they are going to Riga because of bigger yields we can get in Riga, and comparing prices, differences in prices. So it looks that for some it's more interesting to go to Riga. Of course, I know some Lithuanian big projects in Latvia that's not maybe going as planned, but
those are development projects, and we have to separate the two. So the development projects is like a whole different game. It's like different risks, different yields. What we work on with is really what we offer is working rental real estate apartment, right? So there's no risks about if it's going to be built or not built, like all the phases of building everything. So it's already operating unit.
What is the structure like? What I'm buying, to be exact?
Underneath, so obviously all of that requires structuring, and there's a lot of what goes into the structuring. So to build that, you have economic interest in the apartment, so you have to structure it, because it's not really possible that there's going to be apartment and there's going to be 10,000 investors as owners registered in the land register. So that also obviously doesn't work. So how we structured that, we structured based on the bonds. So based on the bonds, there is basically SPV in between. There's a bond, and then we fractional the bond, but the bond is paying the interest, which is linked to the net rental payments. So that's basically the structure. So technically, what you are buying is
that specific real estate.
So what you're buying the fixed income product, the bond, which is linked directly to the performance of specific apartment, and you buy a fraction of that. So that's how you get economic interest in the apartment, and then the bond principle. I know we're getting in a lot of details.
I like it.
But the bond principle is basically connected to the value of the apartment. So depending, it can be adjusted afterwards when the bond has to be repaid. So it's adjusted
Principle.
Yeah, bond principle.
Okay.
So it's adjusted based on the apartment valuation or how much the apartment is sold in the market. That was quite a bit of work to sort it out, because there's a lot of structuring so that we can get economic interest in that specific apartment.
Also in capital appreciation.
Yeah.
Because my next question was like, if I know that if you structure, let's say, SPV that invests into real estate, there can be, let's say, some taxes. I don't know, profit tax, because it rents out, it gets some profit. Then do you lose a lot of value in that part?
No, it's a pass-through entity, and we could structure that. There's no. There are maybe some. I don't want to be kind of wrong on that, but in general, it's a very efficient structure which you have.
Okay.
And then say what matters is what like the end investor gets, the retail investor net. So irrespective of what is the structure, what we look at, if the investors are fine with the yield, then obviously that works, and we are happy to continue developing this product as well.
For me, it sounds very, very interesting, because I could say that we thought about something like that, like a long time ago, maybe more than 5 years ago. Yeah, and when you can choose specific object and you can invest, let's say, 50 euros or 1,000, whatever you want, but you can choose specific object. Because if you, let's say, buy real estate fund that has 1,000 of those, so you don't pick specific. You just pick, let's say, region, asset class. Is it residential or commercial? But that's it. And here you can basically pick, oh, I like this apartment more than that one. Or so how would you say this product compared to, I don't know, bonds or loans? Is it more popular, not that popular with your investors?
It's very popular. So to the extent that we basically everything what is put out there is funded. So obviously there is educational process so that investors understand what it is and how it works. But in general, definitely the more of the constraint is on having enough of those properties than on the demand side.
And how often do you put an apartment?
No, these days it's basically every other day. There's a good selection like every day, but there is quite a bit of demand.
But I believe not as much as, let's say, loans.
Oh, no, 100%. I mean, that's completely new product, and there's we have only 2 partners today. One from the same Latvia, the other from Austria. So we are working on getting more partners, and that's still a new product, but very, very promising product.
Okay.
And very interesting for retail investors. I mean, it's easy to understand in the same what everyone would want to do themselves, but instead of doing whole apartment yourself, when you put all the risk in one apartment, so you don't know how it's going to go, now you can fractionalize, you can invest in multiple, and you don't have to deal with all the managing, which obviously many only realize when they start doing this, then realize how much actually time it takes to manage all the rent and all the kind of property,
all the calls.
Yeah, exactly.
You know, one client says, "Oh, I got a call from police. Like we had a fight in the family or something." And not talking about utilities only or something like that. And the last part was ETFs, I believe. Yeah. So why you started not from, let's say, stocks, as some other companies did, but from ETFs?
I think ETFs is what we believe is, in general, our philosophy about investing is that we want to help people build long-term habits and build wealth long-term.
Yeah.
And we believe ETFs is a better product than stock picking. So in general, like stock picking, sure, there is a place for that, and that is that's also the reason why we are building the stocks. So we also going to launch stocks. You will be able to invest in stocks on Mintos as well as in any other broker, because for sure there is a place for that. But we believe that for the long term, ETFs is much better, so that people don't really try to beat the market by stock picking, which is obviously super hard. Sometimes you win, most times you actually not going to be successful. But it's a good, basically diversified portfolio which you can build through ETFs, and also very straightforward, to be honest.
Okay, understood. So, how, like, do you have a list of ETFs? I don't know, like specific ETFs you choose, or any ETF I can buy?
Today we have a curated list, so we're gonna build a portfolio for you. But now when we're gonna launch stocks, then in conjunction we're also gonna launch ETFs. So there's like a bunch of ETFs where people can choose themselves.
What do you mean we build a portfolio for you?
So basically, based on your profile, your answers which you give to us, we're gonna build you what we believe is the most suitable portfolio for you in terms of allocation to equity.
Okay.
It's basically a robo advisor, if you wanna. Not necessarily that I like the name robo advisor, but it's a curated portfolio which we're gonna build for the customer.
Okay, so yeah, so I understand that I do not pick specific ETF at the moment, but I get a portfolio that is according to my risk tolerance and investment horizon. Okay, understood. And what like I would say 5 years ago, or maybe 10 years ago, investing in ETFs or stocks was not on decline, but in a bottom. Like after a great crash of 2008, at least in Lithuania, we had, I believe, maybe the bottom was 2014, 15, so maybe 10 years ago, but it was starting to pick up. But 10 years ago, we didn't talk about ETFs as much as we do now, at least here in Lithuania. But I see a social network from US and Europe. I see the same trend. Like 10 years ago, not that much talk about investing in ETFs. So when you launched ETFs, what you said about when you get the license, I believe 2 years ago, how it took off, like compared with other of your products?
We launched ETFs in last year, in 2020. All the assets actually we launched 2024. So start of 2024, we had just loans. Then we launched bonds, we launched ETFs, we launched smart cash, and we launched the real estate in 2024. And this year we're gonna launch crypto, and we're gonna launch stocks this year. And then we have a complete offering on one platform. ETFs is good. I believe that is a backbone of most of the investors, but obviously it should be a backbone for most of the investors. So I think in general, your equity is like stock market exposure, hopefully through ETFs, because I think it gives you a good diversified portfolio. Should be a backbone of any portfolio. But of course, for ETFs, there's plenty of choice, right? So it's not necessarily that we use ETFs to get more clients, because ETFs you can invest in whatever through your banks, through your Neo bank, or through other platforms. So there's plenty of choice. So it's more of a commodity. But it's also, from our perspective, we wanted to launch ETFs so that people don't necessarily have to have multiple platforms. If they want to build one, they can do it on one platform, and they don't have to manage multiple platforms. So that was more of a thinking than that people going to come to Mintos just because we offer ETFs. ETFs are basically commodity and available everywhere.
Yeah, but one of my question was how do you, let's say, in ETF space, how do you compare or try to compete with other providers? But when you said that it's more like a portfolio, so okay, so then there is an answer. So you don't compete, we just come to us to buy an ETF? Because
But we will compete obviously when we launch the single ETF, so that you can pick ETFs. But look, it's that's a commodity.
Yeah.
It's the same as I know how one grocery shop competes in selling bread to the next grocery shop, which is also selling bread. Bread is bread. Like ETF is ETF. So it's more about the convenience and having everything in one place rather than that. I mean, the same iShares World Index ETF on Mintos is the same what you can get on other platforms. So there's only that much what you can differentiate. Sure, there is some UX, but I would say that is also fairly good these days across most of the platforms. And then what we can offer is that, yes, you can have ETFs on Mintos, but you can also have other assets on Mintos, and you can build like one portfolio just on Mintos, and you don't have to jump around and move around money across different platforms, especially these days when increasingly so AML and KYC comes into the play. We see definitely that's also in the Baltics, we are very stringent on AML because of all the past, right? But that's also changing in on the European level. We see that more and more AML checks and KYC comes into the play. So having everything on one platform definitely is much easier.
I cannot agree more. Like if you have 5 or 10 platforms and every year you have to fill the same forms, and sometimes you just get blocked because you didn't provide some document. Yeah. So for example, in Lithuania, we have a new law of investment account, and why I'm asking a lot, because I want to understand. I know that I can register investment account with basically any financial institution, like regulated bank, broker. You are like a regulated financial institution. So basically I could register that account with you. But then we have a list of instruments what you can buy. You can buy stocks, you can buy ETFs, you can invest into P2P, but it specifically has to be under Lithuanian law. So I'm not sure if those notes or bonds, if they are fractionalized, I'm not sure if but I just it's very convenient. Like what I do understand, to have one account is much better than to have, let's say, 5 or 10. Okay, so and now as we talked about everything that is right now, you said about your plans. So you cannot go without crypto. What's your thoughts about crypto?
I think crypto is should be part of in general, is a like good addition to any portfolio. It's perhaps like small allocation, which could be allocated to the crypto. And what we see also Mintos, I mean, look, we're not adding crypto just because we believe now we're going to be the best place to invest in crypto, but we are adding crypto so that investors again can have everything on one platform. So what we see in times of volatility in the market, so for instance in November when Trump was elected, or now in March when the tariffs started, there's volatility in the market, and then we see that investors are moving money perhaps from Mintos to other platforms to actually invest in crypto or invest in stocks. So instead of doing that, so we want to have all this experience they can have on one platform and can invest in crypto also on Mintos. So it's fairly straightforward. Obviously these days we're not going to launch like all the shit coins and whatnot. So it's a fairly curated list of crypto, which we believe should be offered to investors and going to allow investors to invest in crypto. Again, I would say these days crypto is more or less commodity. So buying Bitcoin on any of the platforms is still the same exposure to Bitcoin what you get.
How is with crypto regulation? I read that it became regulated like this year or some I don't know, half a year ago or something like that. Were you waiting for specific regulation or because of investor behavior? And how is that regulation plays out? Like, do you can investor buy it directly for you, or you also will choose some partners in that space?
Yeah, so crypto today you also can offer through exchange traded products, so ETPs. So that's how we're gonna offer. So you're basically buying the exposure to crypto through a regulated instrument, which is ETP, And there is, for most of the largest coins, you have ETPs and those exchange traded products. For instance, the same BlackRock launched the Bitcoin ETP, so you can invest through that. So that's basically the setup how you can offer exposure without buying directly the coin, which comes with its own kind of risks, because then you have to work on custody, you have to work on whatever the insurance and whatnot, right? So through ETPs, all of those things are taken care by the fund manager, which is managing the ETP.
Okay, yeah. So that's that sounds logic, because ETPs. I know that iShares launched or BlackRock in the US Bitcoin ETF, which is probably the best launch of forever of ETF. But you're talking about European instruments.
They launched in March in Europe as well. In Europe, the BlackRock launched in March, but there are other providers which already are getting quite sizable funds into crypto through the ETPs, and they are basically the benefits of investing through ETPs is that they are regulated instruments. Again, ISIN, all the tax is much easier. You don't have to really think that much about the custody and all of those things, which if you invest directly in the crypto are the things which definitely you should consider.
At least in Lithuania, I know that a lot of banks, they do not let invest into those ETPs because it's not a UCITS fund usually. Maybe it's a fund structure, but not that UCITS regulated fund. So, and then you have to be a professional basically. How is it in like?
It depends fund by fund. So there's multiple. So for different cryptos, there's different ETP. So I have to check. So, but again, this is still in progress. So I think we should be launching in the next few months. So then when we launch, then I can share you more details about that.
Okay, so it's a future, and you mentioned that you do crypto, you do stocks, and basically you have all the package.
Yeah, then I guess that covers most of the assets which we believe any retail investor would want to reasonably invest in. Of course, you can go then in more alternatives. You can go, I don't know, in art or sneakers or wine, but that's already a bit too exotic for the time being. And truth to be told, obviously, when we launch all the assets, we have to also work on the overall experience so that we can help you to understand like how much to put in any asset. There's plenty of work to be done there.
And all the time you were talking about, let's say, real estate and loans and other things, I was thinking about one thing. For example, you have in real estate, you have, let's say, partners. When we're talking about loans, you have loan operator, those companies that lend money. And so what due diligence? You have to do lots of due diligence, like how you choose a partner, how you choose that company. For example, how you choose that company in Africa, that like it's basically, it's okay, mostly probably Europe, but still different countries, different laws, regulations. Like how it should be difficult, and maybe there is some risk. What I wanted to ask.
This due diligence obviously more is prevalent in the lending companies when we basically have to choose a lending companies or have to do due diligence on lending companies, which then we connect to the Mintos. But we have, I mean, look, we've been doing this for 10 years. In the early days when it was me and other Martins, then obviously the due diligence was like very simple and very straightforward. So today we have a whole team working on that, both from the legal perspective, not both, but actually from legal perspective, from AML perspective, from the credit risk perspective. So this whole process to go through the due diligence. And we've just been doing this for quite some time. So I think in general, we've seen like hundreds of lending companies, if not more. We have done due diligence on hundreds again of the lending companies. So obviously that comes with experience. For the other assets, so it's less so. For instance, for the bonds, most of them are actually already issued bonds or regulated market bonds. So still we're gonna check what are those bonds, but they already have gone through some of the checks and balances. And then for the other assets, they are for real estate, maybe it applies a bit more, but still you're at the end of the day investing in underlying real estate less so than in the real estate management company.
Yeah, but with real estate, yeah, I understand that real estate is like a main object, but in that line, it depends how that manager can like provide value. Like, so you double check, you choose like a manager, and there are track record or something like that, and how they deal with some, let's say, challenges that occur time to time.
But look, Artūras, it's the same as with any other service provider, I would say. So likewise, for the payment service provider, we also have to make sure that they gonna be in business and that they're gonna do good work. Or with verification service, which we use, so this basically the service providers, and you check similarly. Obviously, there's maybe a bit more things to check, but in general, it's just a service provider, and you have to make sure that you're working with good service providers.
And looking into the last 5 years, you mentioned COVID, war, changing in your regulation. Like, how, like, okay, I will ask differently. I checked, you have a graph of assets under management, and I believe 2019 or 20 years before that was like growing like that, and then not that fast, let's say. And I believe it was some part of COVID, maybe some part of war. So how was those years? What were challenges? How you navigated them? Like maybe because it looks like everything in one place. Those 2-3 years when you did all the changes in regulation, also came all the other changes, and COVID. I remember like. Payments stopped basically from different companies. Clients maybe wanted to withdraw money, maybe no. Like a lot of client relationship, probably a lot of questions from maybe institutional investors, like how you're gonna handle all the defaults that's gonna that those are coming. So could you reflect a little bit?
Sure. It's a correct assessment. So from 2022 till end of 2023, that was definitely very challenging period for us because all of the things came together. So first of all, 2020 March, when the COVID came, that was a perfect storm for the business like ours, when we have retail investors on one side, then you have the lending companies, then you have borrowers for those lending companies, and all of those parts are affected. So that definitely was a very challenging period. Then we went into the regulatory process in 2021, which basically meant that in essence, we put the business on hold until we get the regulations done. And then in between, we also got the Russia war, which obviously affected us because we had some exposure of the portfolio in Russia. So that was like good 3 years of a very challenging period. But I think, as the saying goes, that what doesn't kill you makes you stronger. So definitely, I think we have gained a lot throughout those years, which definitely helped us in terms of putting the business in much better position. And that's not only about the regulations; it's in general how we approach things. And I think it's just been. Not that we would want to repeat that experience. So as you say, so the assets under management, which is a key metric of business like ours, was going like this, then was basically flat or bit declining, and now it's again like going up. But it was a good experience in terms of like company's development and maturity of the company. So we definitely became much more mature companies throughout those years.
Yeah, because when you say that, let's say you have that regulatory process of 2 or 3 years, and so basically you can have a plan or products what you want to develop, but you cannot launch them.
Yep.
So yeah, I'm just maybe not from investing side, but from, let's say, business and management and, let's say, personal side, because I believe everyone that manages a company or works in any, let's say, even employee, we had some challenges at that moment, and as you said, you weren't killed. You got license, and yes, now I'm not sure whether I can find a company that can provide that package of instruments as you do. I don't know, maybe you won't tell the name, but I think there are not.
I have not seen in Europe, definitely not. I've seen something similar perhaps in the US that are a bit similar companies, at least like one or two I know, but in Europe and not necessarily. So obviously I've seen that as like you and perhaps investors know that there are platforms which just focus on one thing.
Yes.
For instance, I know real estate, yes, but they just offer real estate. Or there are platforms which are just focus on traditional investments like stocks and ETFs, and then maybe they offer some bonds, but those bonds are basically just government bonds, right? Or then there are platforms that just do crypto, right? But having everything on one platform, I have not really seen at any reasonable scale in Europe.
And talking about stocks, are you planning to launch, let's say, just US stocks or European stocks? Just curious.
Yeah, it's basically your, again, I look at the stocks the same as ETFs, it's just commodities, so the same offering, what you expect, what you have in other platforms, you would expect also to have in Mintos, so for sure. Yeah.
Can you provide, let's say, if I would like to buy ETFs? Okay, at this moment I cannot buy ETFs for you. I buy a portfolio, so there is probably some management fee of that product. But when you are planning to launch stocks, can you compare, let's say, in pricings with others, or maybe you cannot? What can I expect if I would?
Yeah, you can expect basically that it's going to be in line with the market standards. So we basically not going to invent anything new. So for sure, just the same what you see in other platforms.
Okay. Yeah, because
and these days, look, these days that's you're talking about like small fees. So in general, the stocks and ETFs is a very low margin business from the business perspective. It's a big volume, but low margin because the fees are very low what you can charge and what people expect to have.
Yeah, so as you said, it's also
definitely not going to be the bank type of fees where you still, unfortunately, have to pay quite a bit of fees to buy a stock.
But you won't compete on that side where you don't have to pay a commission.
I think some of the ETFs or stocks you can offer for free, but then there has to be other ways how you make money on that. But again, I think it's very standard market practice these days, and there's not much how. The one thing what you're not going to compete is on price, so I don't think there's much to be competed on.
Yeah, and when you offer not only just that one commodity, as you said, so it becomes a little bit different question. Okay, so we talked a lot about Mintos, its history, its path, and where it's headed. I wanted to maybe at the end of this part, because we have the last one, and I'm not sure whether you're gonna share a lot, not a lot, but at the end of this Mintos part, I wanted to ask, still, you have that quite big, I believe, loan portfolio still, and already 10 years. So in those 10 years, we have, as you said, a lot of challenges, and there are some probably cases that are or was defaulted and already dead, or as I know, bad debt, but that's it. No more recoveries and some in recoveries. Could you just give some sense, like what part of a portfolio now? Because I'm not sure. Maybe banks have that big loans, but for example, in Lithuania, around 30, 50 million and short history, and you have 10 years plus or about 10 years and very big amounts, different regions. So what's the stats of those bad debt and what's the stats of recovery? What should investor expect if he or she has, let's say, diversified portfolio of all those loans, let's say with Mintos?
Look, recoveries obviously is part of lending, so part of the loans unfortunately gonna underperform. I would say that throughout those 10 years, most of the recoveries, like vast majority, come from two events. One was COVID, that was basically affecting in many different ways the lending companies. Some of them went out of business, and that's where the recoveries come from. And the other was Russia war, which is different, where it's basically about getting money out of Russia, which is a challenge, not necessarily that the loans are not performing. So those like two black swan events affected the recoveries the most, or funds which are in recovery. In general, the recoveries, if you look on the well-diversified portfolio, is I think the best way to look at it is like what is net yield after the recoveries and all the bad debt, and that's what we reckon is like 8 to 10% would be your net yield after the recoveries. In general, I would say that in recoveries, that's part of our business as well. So we have to work on those recoveries, and we continue working on them. So we have actually recovered the vast majority what was in recoveries already, more than 50%.
More than 50%.
Yeah, I think it's already approaching 60%, and there's still recoveries to be made. So in general, I would say that even if there are recoveries, it's just the issue with recoveries is that it's a long process. So it's not that you can recover the money like straight away. So it takes sometimes even 2, 3, in some recoveries we've seen even 5 years, but you recover, right? So that's the most important. And we continue working on those recoveries. And the key is just to have a diversified portfolio. So unfortunately, sure, we have seen those cases when people start right before Russia war, and then they invest everything in Russia, and then all the portfolio is at risk. Yeah, well, but that happens if you try to basically stock pick in a loans marketplace, right? So also in the stocks, if you build a diversified portfolio, there's going to be stocks which perform, most of them. The same is investing in loans. Most of the loans going to perform, and then there's going to be some stocks, or in loans perspective, loans which underperform and don't perform. The key is to build a diversified portfolio. For a diversified portfolio, your return will approach kind of the basically asset class return, and this asset class return we reckon is about like 8 to 10% based on over 10 years of experience, and having seen like two major actually events which affected the recoveries.
And would you say that now, let's say that yield or return, what I can expect is or should be lower than what was like, I don't know, 5 or 10 years ago? Because what I'm asking, do you see that yields are going down or no?
They are very much fluctuating, so it depends also on the availability of funding for the lending companies. Depends obviously on the interest rate environment, depends on the whatever tariffs, no tariffs. So there's like plenty of factors which affect this. So there's no like one general trend. So I think overall, how I see and how I think about the loans as an asset class. So in euro terms, I think long term, anywhere from 8 to 12% is perhaps a yield what we could expect, and then depending if there's more recoveries, then it's approaching more 8%. If it's less kind of recoveries and less bad debt, then it can approach even 12%. So kind of between those numbers is something what I have personally, but that's again no investment advice, nothing. It's just basically my assessment after 10 years with working with this, which is similar actually to high yield bonds. Like I think it's similar to high yield bonds.
Yeah, but why I'm asking, because I remember, let's say, when all this industry started, people could or wanted or could expect higher yield, let's say, compared with German government bonds because of new product, less liquidity, more risk, more uncertain, and then yield was zero for safe government bonds, and let's say interest rates in loans was, let's say, 12%. Now what we have a little bit higher risk-free rate, so let's say 2 or 3%, and maybe 10% on the yield on loans. I'm just guessing. So that spread narrowed. What you could expect when, let's say, the market matures or is bigger, more liquid, So that spread went, let's say, from 10 or something to maybe, I don't know, 5, 6, 7, but it decreased a little bit. So that's my view, what I am seeing, because I also check sometimes that from Lithuanian platforms that work, let's say, 10 years. So they calculate interest rates at which average interest rates every month. So you can see it was, let's say, 22, and now it's 15 for consumer loans, let's say. So it's going down, and if you compare it with Euribor, let's say, there is some correlation, but you also can calculate that spread. So it looks like it contracted a little bit in the last 10 years, but because of, as I said, more mature market. Okay, so from my point, at this moment, I would like to switch to the last question of our podcast, and usually it is a personal investment strategy. And so you run Mintos, which is multi-asset investment platform. So where do you invest yourself?
Yeah. I think look at this that the companies are built at the image of the founders is I guess also true in this case. So I'm also a multi-asset investor. I prefer to invest to have a diversified portfolio, and also what I pay attention that is passive, so I don't have to deal with active management. So that's also is reflected in my personal portfolio. So it's very diversified. It's many different assets. So I have investments in the same, obviously, where we come from the loans. So I do invest in loans through Mintos. I invest in bonds. So bonds is a good allocation. I have ETFs. I do have crypto. I do have the real estate, obviously, and then also I do have some farmland. That's maybe a bit kind of more exotic thing, which or less conventional thing, not exotic, but less conventional thing. So it's very kind of diversified portfolio, and that's also how I look at the portfolio. Try to. I don't have like one position which has like more than 50. I mean, none of the positions allocations today, I think none of them is, and crypto I have, none of them is above like 20%, I would say.
20%.
Yeah, I think 20% is the max I have for any of those. So it's very diversified, very passive. To be honest, I don't really look too much into the performance over the short term. So all of those investments are for like 10 plus years at least. Well, like personally, how I have defined, but that's 10 plus years, and I'm not doing any movements or reallocations, which maybe sometimes I should, but the portfolio is still, it's not like a huge portfolio, but it's okay portfolio, but I'm not spending too much time on the portfolio, to be honest.
So could you, let's say, just give us a view how much of a percentages wise, how much you have, let's say, in loans, bonds, ETFs or stocks, just to is it like plus minus 20% of each, or you have like big allocation into loans?
It's changing, to be honest. So I think there is when I started to build portfolio, I had some, as usual, the best friend is Excel. So in Excel, the allocation, how much I would want to have in any asset class. To be honest, I actually try to avoid giving exact numbers, because I don't think there is like one number which you can stick to, and every person has to choose themselves based on their whatever needs, preferences, what they understand, what they don't. And what I have is like most likely should be different than the others, because I have my basically background, right? But in general, it's what I can say is diversified, and it's changing. So I'm not trying to reallocate from one to the other. So I know the same. I know loans used to be more. Now it's a bit less. Than ETFs. I had a more allocation. Now I actually, in real life, it's not as high allocation as I put it. So it's ever changing, but not because I'm doing active trading, but because the assets are performing, or then if I need some cash, then I take from some of the assets and use that cash. So, or then if I invest, then I invest based on that on my perspective at that time, or just availability of what is available to invest in. For instance, bonds. I want to build bond portfolio on Mintos, so I invest in bonds.
Do you do some, let's say, regular monthly investments, or you don't do that?
No, not really. So unless you would count real estate kind of mortgage payments as investment, which to some extent you can actually count as an investment. But no, I don't do on a monthly basis. So it's at best on quarterly basis, but actually, to be honest, more on kind of semi-annual or annual basis. Yeah.
Okay. Understood. So basically, you do more of, let's say, asset allocation between different asset types. You check or you look at the situation, and maybe you want, as you said, to build more of a bond. So you decide, let's say, amount, and you do that. But you don't do that. Okay, now it's Trump tariffs, stocks are minus 30%. Oh, I'm gonna go all in.
No, I'm definitely not an active. So how I think about it is, I mean, first of all, you most likely have to like it to do it a lot, or then you have to have a big portfolio in that. So for you to make sense to be active. So I have none of those. I'm not necessarily super excited about following each and every news and predicting the future, which is very hard to predict. And I definitely believe that like stock picking is super difficult. Sure, in those volatile markets, like buying the dip, blah, 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 sure makes sense. And in general, most likely I could do that, but that's as much active as I would want to be. So otherwise, not really. And then also my portfolio is not like that huge that it would make sense to really spend a lot of time on trying to manage. So my thinking is more the same. What I'm trying to build in Mintos, or we trying to build, is that it's much more about asset allocation than trying to be very good at specific assets. So in general, I just trust the assets. I know that the stock market most likely in the long term should yield you, I know, 7%, 8%, 9%. Okay, these days maybe less, like depends your entry point, but let's say it's 7, 8%. I know that the real estate gonna yield you net rental payments of, I know, 5, 6% plus capital appreciation. I trust that the loan's gonna give me 8 to 12%. I trust that the bonds as an asset class, high yield bonds, also gonna give you, I don't know, 7, 8, 9%. And I build portfolio around that. And then I have, I don't know, the real estate, which is not necessarily rental real estate, which is just basically inflation hedge, and then the same, I don't know, the same farmland. It's again just inflation hedge, and I just trust in the asset instead of going deep in specific asset and trying to allocate and try to squeeze the extra percentage point of that asset, which you certainly can, but just requires a lot of time, and then in many cases also luck, I would say, and like beating the stock market by stock picking. I mean, good luck. I don't think it's really doable for anyone, actually. Even those who say that they can, I think they consistently, unfortunately,
say that for Buffett also.
Yeah, but I mean, Buffett also, most of his returns come from investment in Apple, right? So it's not like consistently beating the market, and so like today he cannot find the opportunities to invest in, which again you can argue is beating the market because then he's holding cash and whatever returning cash. But I think there is very, very few people who can beat the market.
Let's say Buffett is only one.
Yeah.
Okay, so and I remembered one thing I wanted to ask about Mintos. I think, or it's just my opinion, like when you introduce more and more products, it's like one app, everything in one place is amazing. But at some point, I believe investors, or some investors, and I think more than half, will ask, like, how I choose from all of those investments. So, and there are some investors that just know that they want exactly buy that stock or invest into that real estate. But as you said, it's gonna take a lot of time, and maybe they will try, and after 3, 6, 12 months, they're gonna say, I don't want to do all that thing. So do you see that problem, and are you thinking about solving that problem? Because to have everything in one place is amazing, but it's from my own experience, I believe that about, let's say, 80% of investors, we don't want to do the job.
I would say even more than 80%. So I think from the stats I've seen, there is about 5% of investors are active traders. So we could assume that those active traders are those who actually want to do that work of choosing how much, and 95% are most likely those who don't want to be. Maybe of those 95%, there is like still some whatever percentage which maybe still want to think about asset allocation, but in general, I would say it's even more than 80% who don't want to do that. I think the same what is happening in general in the world, AI definitely going to help with that to the extent that the regulator going to allow it. But I definitely believe that it's going to be expected that from any financial product you use, there's going to be some AI financial assistant who can help you with those decisions, and that's definitely also what where I see the future, not the distant future, and that's something also when we have all the assets, we definitely going to look also at Mintos, but yeah, I think AI financial assistant is
from that perspective. Because
the only thing is how regulators gonna basically look at it, because there has to be traceability of and then about investment advice and everything. But for sure, already today I see AI native companies built around basically AI financial assistants who help you not necessarily with investments, but in general with your financial personal finance, right?
Okay.
And then definitely with all the developments in AI, sure, that's most likely, not most likely, but definitely the solution for that.
Yeah, one point, because what I was thinking from my perspective, I would say, as a, let's say, as a client potential, what might look as a good solution. For example, I come and I say, okay, I want to invest 20% into loans, 10% into bonds, 50% in stocks, 10 in crypto, and boom, and that's it. And like, I can choose my own allocations, and as you did with, let's say, ETFs, but with all the asset classes. So that would be very convenient. Is it possible from regulatory side? I believe for you, what I heard, basically everything is possible, because you did a lot of new things. But from investors' point of view, this solution looks really, I don't know, friendly, not helpful. Yeah, because I just choose allocation. Okay, I want more in real estate. I increase allocation. I want more in fixed yielding assets. I increase that allocation.
But I think, I mean, the thing is what, especially those who start investing, or actually in general don't want to spend that much time, is actually to give them the starting point.
Yeah.
And to give the starting point, then you for sure can use kind of AI-based solutions, which gives you a starting point. Okay, Artūras, this is whatever your background, this is your preference, blah, blah. Okay, your starting point should look like, I know, this much in ETFs, this much in bonds, and then you can adjust yourself. But the key is actually to give the starting point, because truth to be told, not, I mean, yes, simple rule like 60% in equities and 40% in bonds is like so old school when you have all the other assets available, and that's also not necessarily the best allocation, right? 60/40, that's like comes from, I know, way back in
like
many years ago, right? So and it's very, very personal. So and I see these questions actually when people approach me, like from my personal network, when I just have to sit down and just ask, okay, well, what do you actually want to have? What are your goals? And then based on your goals, and that's what private bankers do. And then with the help of AI, you actually can scale it and make it much more tailored to any investor.
So are you like experimenting with those financial assistants, AI financial assistant at this moment?
Not necessarily as a company, more like the teams or personally, but that's, I mean, there's no question about that. That's going to be expected from any financial service company. I think it's going to be expected that there is some AI financial assistant.
Okay. Yeah. So I jumped a little bit, and the last question, because our time is running. At the end, we ask for a book recommendations from financing or investing side that maybe, I don't know, changed your life or was just a very good read. Maybe you have some recommendation for our viewers.
I think one of the, when it comes to investing, or finance in general, is this Psychology of Money. I think that gives a good overview in general how to think about the money and what are the different kind of cognitive basically approaches to the money. And it doesn't cover only investing, but I think that is a very basically a book which covers the money from different perspectives and gives you an idea how to actually think about the money. So I definitely would suggest Psychology of Money.
It's probably one of the most recommended books in our...
Is it?
Yeah.
Okay.
Yeah. Mm-hmm. I would say that now it's, I think, 46th podcast. So I think like probably 10 people recommend it. Yeah. So I read it. I liked it. Yeah, it shows that let's say money is not just numbers, and mostly not numbers. It's a lot of psychology and how we deal with that. So, Martins, thanks for coming. I will say thank you for our viewers. I hope some of you listened to the end. I hope that our first, we say in Lithuania, pirmas blynas, so first pancake, didn't burn, and it was interesting. And if yes, so I believe it's not the last one. So thanks for you for watching, and till the next time, and thanks for coming.
Thanks, Artūras.